Alright, guys, welcome again. So, I want to quickly break down the Bitcoin trade I took last week, and but then I want to use that as a means to basically show you guys how I analyze my charts from the monthly time frame, or let's say from the higher time frames all the way to my entry time frame, right? So, I'm a dynamic trader. I'm not a swing or a day or a scalper, right? But um, most of my perspectives are usually a longer perspective. So if I was to choose, I'll probably call myself a swing trader. However, sometimes some of this perspective play out very short, or in a short period of time apparently. So that's why I don't really box myself into swing trading. Right, I can still take scalp setups. I can still take intraday setups. So depending on what the setup looks like, right? What the trade is apparently. So we'll get right into it, right? So Bitcoin is our case study today. So basically, we are going to start from, like I said, most of my perspectives are usually from a longer time perspective, right? So that's why I have like a 6 months time frame over here. But for Bitcoin, there's nothing really much happening in 6 months, 3 months. You already know that price has been bullish. So already we are having bullish sentiment. However, even though the buyers were looking slow at some point, but basically they still showed that they were still in the market, right? So coming into the monthly time frame, we still see that okay, price is very much still bullish, and what we need to do is expect a nice bullish candle to follow up this previous inside bar here that we created for a whole month, and basically break these highs and create new all-time highs, basically as usual. So but when we get to the weekly time frame, we begin to see some consolidation at this high here, and then price at some point was threatening to come down, but basically closed strongly on this week, this weekly candle, and then basically we were looking for more buys. Once we saw this strong candle, everyone, I'm sure, was more confident in the buys than the sales. But now, here is where the actual analysis takes place, because having to see that consolidation created a very nice structural movement. So understanding that structural movement is key for you to understand where is price at the moment and where price be going to. But we already know that what we are doing is that we are trying to buy, because that is the perspective we've gotten so far from the higher time frames, right? But now we can see that price came down, creating lower highs and lower lows, right? Eventually we broke structure, right? We got to this high, and then we crashed down again. But you see, the way we crashed down here is very interesting, because we didn't crash impulsively. We crashed very correctively. The sellers came down, but they were not strong enough. They came down, basically making it a bearish structure at this point. However, the bears were not strong enough. You can see it in the way the candles look like, very weaky, unlike what we had at this point here, right? So that is something you need to pay attention to when you're analyzing. Pay attention to the impulse, pay attention to the correction. So when we saw price push up at this point, it was very impulsive. However, I remember that we were seeing a bearish structure because price had gotten to this previous low, right? So if you're in a bearish structure, however, we see that the buyers look like they are the ones in charge of the market. The only thing we have to do is basically wait for an opportunity to see to be confident enough to take the buys, because anything could still happen, right? Price could still decide to also impulsively drop down. Why? Because we began to see that price was slowly moving up, so the buyers were now slow. The buyers were not so strong as before, right? So the thing is, at this point, remember, we are in a bearish structure, right? And the buyers came in strong, however they were slow. So now the next thing you would want to do is look for opportunities to sell, because that is what the structure is telling you, or you decide to stay out of the market. Those are the two things you should do, right? So in this case, I actually sold this market because I found my supply zone at this point here, and then you can see that price started dropping at some point, right? I started trading my stops as usual to follow structure, right? Let me see. So this is the trade, right? I basically entered in lower time frames, right? And I'll break that down later. But then I trailed my stop and I got stopped out, right? But I didn't get stopped out with my original. I got out with a very, very tiny loss, right? I'm not even sure if I lost at all in that trade, but let's just say it's a tiny loss because I can't really remember. But my stop at first was moved to to the immediate high, and then moved it close to entry too at some point. So, but basically, right, that's the key, right? Whether you're a winning trade or you're losing trade, or whether a trade is going to win or it's going to lose, what matters is how you manage the trade, so that you don't get to lose exact things that you wanted to lose at the end of the day, right? So, but basically, you can see that price basically pushed up impulsively. Now that's telling me that okay, since we are not selling and we are buying impulsively, it means that okay, the buyers are very much in the market, right? So if the buyers are very much in the market, our next target is this high, right? This is our next target. If this is our next target, we have to look for an opportunity to buy. So what we did was we went to lower time frame, right? Remember that our supply zone that we drew, this supply zone that we found here, right, for the sales. Apparently that supply zone happens to be a key level too. Because if you expand it, you can confirm yourself that this is a key level, right? You can see that price had broken, retested here, broken, retested, went up again and broke it down again, retested, came down, broke it, retested, went up, broke it again, came back to retest, went down, came back to create liquidity, and then price tapped it again and came down. Now that is that. So you can see that okay, this is an actual key level, not just a supply zone. So remember that it's not every supply zone is a key level, right? And it's not every key level that is a supply zone. Or in most cases, you would actually find your supply zones to be key levels, because I mean they don't have to like be support and resistance, right? But then you can call them key levels actually, right? But don't mistake every support and resistance, right? Or in this sense, key levels to always be supply zones. I'm hoping that you are getting the difference, right? So basically, we've identified that okay, this is a key level, right? And if price is going to break it, which it did, it broke it impulsively, right? If price broke it, and this is our next target, like we said earlier, we should expect a retest of that key level, right? You expect a retest of that key level, and if you can get a retest of that key level, then you will actually find an opportunity to buy and push price to the ultimate target that you've seen, right? So the next thing that we are going to do, right, is go down to a lower time frame and see what structure looks like, right? So if price had retested this key level, right, all you needed to do is first wait for price to break structure to the upside. So on the 1 hour, what you want to do is see what structure is looking like, right? So when structure was broken at this point, right, which is our break of structure there, right? So all you needed to do is wait for price to come down to the demand zone and then take a buy. That is basically your plan, right? You don't want to enter into the buys too early. You want to make sure that the buyers have come in by changing the structure to the upside, right? So once you can identify that break of structure to the upside, you go find your demand zone, right? Once you find your demand zone, this is now we're on the 15 minutes time frame, right? Now we're able to spot our demand zone, right? And we waited for a 5-minute confirmation candle. Why? Because our demand zone was actually spotted on the 5 minutes. So you see that even if I took my perspective all the way from the 6 month time frame, you would think that okay, I'm going to be a swing trader, but actually I can actually catch scalp moves or intraday moves as long as the setup is presenting itself that way. So we're able to find our demand zone to be here, right? This block here, basically, right? And the reason why I drew my zone this large to this point was because of how it looked on the 1 hour. On the 1 hour time frame, this whole block is my demand zone. But because I know that the 1 hour time frames candles are actually large, and if I was to trade off the 1 hour, I would actually miss out on almost the whole move, right? If not the whole move, before I can actually enter, because I always want to wait for a confirmation candle, right? And after a confirmation candle, I also want to wait for a break structure to the upside. So now, seeing that okay, we have a 5 minutes candle here, my like I said in my previous videos, right? My stop loss usually I like to put it behind my zone, right? I'm sure you guys know that by now. So that going to the 1 minute time frame now, the 1 minute time frame is what is going to tell us if we've broken structure before we can enter, right? Since we entered on the 5 minutes, right? Usually it's not, oh, we can't go that far back. Okay, that's fine. But then if you entered on the 5 minutes, it's most likely that they're going to have the break of structure to be on the 1 minute. If it's on 15 minutes, most likely it will be 5 minutes, or probably 1 minute, but most likely 5 minutes, right? Depends. If it's 1 hour, 15 minutes. If it's 4 hours, probably like 30 minutes or 1 hour, right? Depending on how the candles are looking, right? So, but basically, right, you want to find a breaking structure around this zone, and once you find that and you have seen that okay, your confirmation candle actually closed bullish, you enter the trade, place your stops below the zone, and then as usual, your take profit is always at the previous high. Yes, we know that this was our ultimate target. We knew that price was getting here, but usually we are not planning to take the whole move. We just want to get a trade, a good setup, right? And the setup usually tip is always at the previous high. We are not looking to take the entire move, but knowing that price was getting to this point here was the major reason why we decided to take this trade, right? So doesn't mean you're going to push and start looking for the whole buys all the way to that. No, just follow the plan as usual. Take a profit at the previous high, and that's done. This was like a very nice 1 to 3, simple, right? So that's how I actually analyze the chart, and this is one of my previous trades. And I just thought to show you guys over here, and I'm hoping that you learned something new, and and probably some of the things that you already knew are kind of redefined, or let's say sharper now. So thank you very much for watching, and I'll see you guys in the next video. So if you love the video, you could always subscribe, and you'll get to see more videos coming in, right? And also please make sure to drop a like if you liked it, right? So thank you very much. Take care of yourself. God bless.